So maybe you've got money sitting in your savings account that's earning you 1% or whatever the banks are offering these days, and you want to get the best bang for your buck. You would rather have it invested somewhere else, but you're a complete beginner and you don't know where to start. Or maybe you only have $50 to invest or none at all, but you still want to learn more and get started. This is a video for you. Hey guys, welcome back. My name is Faizy, and on this channel we look at Australian personal finance, and today we are exploring 3 beginner apps to start your investing journey. So I just want to start off by saying that we are talking in a general sense only, and this is not financial advice, and I'm not an advisor. Please do your own research as well. Now the timestamps for each platform are listed down below as well, and just keep in mind that there are more than 3 ways to invest. These methods are not the only way to do it. If you have any other methods, leave them down below in the comments. So the first app we're going to look at is CommSec Pocket. Not CommSec, but CommSec Pocket, okay? Keep that in mind. Now the whole point of CommSec Pocket is for beginners and to help them invest and to encourage them to actually start looking at investment options. It has a flat fee structure, they are super transparent about this, and trades up to $1,000 are charged at only $2, which is super cheap. So basically speaking, if you're buying an ETF and the cost of one ETF is $20 and you're buying 5 of those ETFs, the cost to you will be $100 for the actual 5 ETFs, plus a $2 brokerage fee, meaning a total of $102. Now on this platform, you can only buy an ETF. So what exactly is an ETF? So ETF stands for Exchange Traded Funds. Now an ETF tracks an index or a basket of stocks. So if those basket of shares go up or down, so does the ETF. That's a very simple explanation, but hopefully you can do more research on that as well. Now the positives of this platform is that you can start with as little as $50 and you can automate your investments and putting them on autopilot. And you can sync it with your pay period as well to make it very convenient. And basically it just encourages the habit of investing, and you won't just be saving for the sake of saving, but you'll be investing for the future. Now the negatives of this platform is that there's only 7 ETF options, and the popular Vanguard ETFs are nowhere to be seen. Now if you're not familiar with Vanguard, that company is considered one of the best companies out there in terms of ETF choices. Basically because they have really low fees and it is one of the largest ETF providers out there. So that sucks, but it's a beginner app, so of course there's going to be some drawbacks. And if you want to do some reading, I've linked an article in the description that criticizes CommSec for hand-picking these ETFs, and you can read this if you're interested. Now this is different to CommSec because it has less choices. You can only buy and sell those 7 ETFs, and that's really it. Now the biggest thing to consider with this platform is the cost of trading. The flat $2 fee might not seem like a lot at first, but if you look at it as a percentage of the actual trade, I think you'll change your mind. You're paying 4%, which is very high. Now, as you trade higher amounts, the fee as a percentage gets lower, and the lowest fee you'll ever be charged with CommSec Pocket is 0.2%. And if you trade over 1K, a fee of 0.2% is imposed. Now, keep in mind that the ETFs that you buy, the ETF providers charge a management fee as well, and that's an annual fee. Now, this varies from ETF to ETF, so do have a look. So in reality, you'll be paying the brokerage fee plus the annual ETF management fee as well. So if you do make a trade, it settles after 2 business days. This is pretty standard. Now you do have to have sufficient funds in your account for the settlement to occur. If you don't have the sufficient funds, then you will be charged a $10 fee, so keep that in mind. Now I would say this is a good platform to start off with if you're investing small amounts only, and this is more for learning purposes to get you in the habit of investing. Now as you do start to develop your knowledge, you really want to try and switch to other platforms and get off this one. So now let's look at some ETFs that are on offer with this platform. So with the CommSec Pocket ETFs, you've got the Aussie Top 200, Aussie Dividends, Global 100, Emerging Markets, Healthwise, Sustainability Leaders, and Tech Savvy. I really don't understand why they don't have the ticker codes on the website, but here you go. Now guys, as always, please like if you're finding value so far. Moving on to option number 2, which is Spaceship. So Spaceship launched Spaceship Super in 2017, and since then they have launched 3 more portfolios. Although this is a fairly new company, they have over 100k customers already. And what I love most about it is the fee structure, because this is actually quite decent. Up to 5k, they won't charge you a single cent. So basically it's completely free to buy into their portfolios up to 5k. We're literally talking all 3 portfolios. You'll pay no withdrawal fees, establishment fees, termination fees, or contribution fees. Now, this is huge as a beginner because if you're just starting out, you can pretty much do regular contributions fee-free. Now, the fees kick in after the initial 5K, and everything after 5K is charged at 0.1% or even as low as 0.05% depending on the portfolio. So if you really look at it, that 0.05% is super negligible and it's really small. So if you actually compare this to CommSec Pocket, you pay the $2 brokerage fee or 0.2%, whichever is higher, plus the management fee of the respective ETF. And with Spaceship, you're actually coming out on top with the 0.1% fee. Now guys, I'll be honest, when I was first researching Spaceship, they displayed their fees prominently right here, but I thought to myself, there is no way that's it. Like, where are the hidden fees? As if 0.1% is the only fee that these guys are charging. And I wasn't really able to find them, and I just thought that they were hidden really well. And honestly speaking, I wasn't able to find these fees, and I thought that this was a shady company because they were hiding their fees really well. But the fees listed here are really it, apparently. They're super transparent about it, and that's what I love. If you look at the PDS of every portfolio, point 6 will say that they absorb the transaction fees, operational costs, brokerage, banking, and others. So what exactly are the risks with this platform? Well, there's a few risks like this. First is market risk. This is fairly obvious. The market goes up and down, so does your investment. Now, it's important to note that something affecting just one share will play a smaller role as the portfolio tracks a range of companies, so it's going to be less volatile. If the overall market declines, then of course your investment will decline as well. The second is concentration risk. Basically, they're saying if a specific market or industry declines, then that specific portion of the portfolio will be affected. So example, Spaceship Universe portfolio has 15% in Asia. So if this part of the world was to decline, then so will the value of your investment or a specific industry like the tech industry. Now, the third is currency risk. Now, this is fairly simple. Each portfolio has exposure to markets that are not Australia, so exchange rate movements will affect the value. So guys, the PDS also has more risks, so do have a look. Now let's look into the 3 portfolios. So the first one is the Spaceship Universe portfolio, and basically Spaceship's strategy for this portfolio is to invest in a portfolio of world-changing companies that basically reflect where the world is heading into. So they've got holdings like Spotify, Microsoft, Square, Apple, Tesla. And with this portfolio, the exposure to the US market is about 54% and the Australian market is about 16.7%. Now, the second one is the Spaceship Origin portfolio. Basically, with this one, you can invest in some of the world's largest companies, including Apple again, Johnson & Johnson, Berkshire Hathaway, Alphabet, and Amazon. This portfolio has the most companies out of all the portfolios that they have, and the exposure to the US market is about 48.6%, and the Aussie market is about 17%. Now, the Spaceship Earth portfolio is quite new, and the whole strategy behind this ETF is to invest in companies that have a positive impact on people and the planet. Now, of course, ethical investing is going to get quite huge in the future, so they're trying to avoid companies that deal with fossil fuels, animal cruelty, nuclear power, gambling, tobacco and alcohol, and stuff like that. So if you want to be careful about where you invest and you want to be ethical, this is the portfolio to choose. Now, the benefit of Spaceship is that you get instant diversification across Australia, Europe, Asia, and half of it is US. There's no minimum investment, super low fees, and you can invest up to 5K fee-free. It can be cheaper than ETFs, and you can automate your investing, and their pricing is super transparent. Now, looking into the negatives, you have less control over your investments because the companies that are included in these portfolios are directly picked by them, and you don't really have a choice as to what companies go in the portfolio. Plus the risks that I mentioned before. If you do like Spaceship, there's a link below to sign up. You can get a free $5 for your portfolio, and I'll get it too, and this can start off your journey. Now, the third and final platform we're going to look at is Raise. Now, Raise is another micro investing app, and this app is perhaps the easiest to use. Basically, they have several portfolios depending on your risk, and each portfolio has just a bunch of ETFs inside of it. And they have a few main features like the roundup feature, recurring investments, and lump sum investments as well. Now, the roundup feature is very unique out of this whole list because the other apps don't have that. And basically how it works is that if you buy a coffee for $3.50, you can link your bank accounts, and the app will track your transaction and it will automatically round up the transaction to $4. And that extra 50 cents will be invested in a portfolio of your choice, and we'll get into the portfolios later on. So that's the roundup feature. The recurring investment is very simple. You can pretty much invest on a regular basis, whether it be daily, weekly, or monthly. And the lump sum feature is, of course, when you have the spare cash, you can just put it in there. Now, the reason why I say this is the easiest to use because it removes the barrier to entry. For example, if you struggle saving, the automatic roundup feature will automatically put you in the mindset to invest, and it'll automatically do it for you. Plus, you have unlimited deposits and unlimited withdrawals. It's all free. Now, the benefits are very good for someone who's just starting out, but I do have a few problems with Raise. Aside from the typo on their website, they say that their fees are clear and simple, but as we go into the video, you'll see why this is not the case. It isn't just a simple $250 fee under 10K or 0.275% per year. It's much more complicated than that, and there's more fees to consider. These are the only fees that are charged by Raise, but there are other fees as well. Now, I'm going to show you a graph of the actual fees, but I promise I'll keep it simple for you so you can understand. So if you're a beginner, chances are you'll invest with 1K or less than 1K. This graph shows 1K invested for 1 year. Now, Raise fees on this graph are $30 per year because that's $250 per month, so that's fine. But then you have ETF fees. These are different for each portfolio because each portfolio has a different allocation of those fees. Then ETF operational / transactional cost, and this is an estimate only as well. So for 1 year for all portfolios, you're paying over a massive 3%. If you take anything away out of this graph, understand that the lower your investment, the more you'll pay as a percentage. So as an example, let's say that you have 1K to invest right now. Let's compare it to the other options. Now, of course, Spaceship is free under 5K, so there's no cost there, so that's completely fee-free. CommSec Pocket, you'll pay the $2 brokerage, plus you'll pay the annual ETF fees. But with Raise, you're paying a $2.50 monthly fee, plus the ETF fees as well. So you're paying $2.50 monthly with Raise, whereas you're paying $2 once-off fee with CommSec brokerage. And you can really see how expensive it can get very quickly. I suppose if you like the roundup feature, then Raise is really the only option for you. But if the only thing you want is diversification, Raise isn't really the best option. The portfolios in Raise are made up of existing ETFs, and depending on the portfolio, the percentage allocation of each ETF varies. So for example, the conservative portfolio is more than 50% bond ETFs, and the aggressive portfolio is only 5% bonds and very heavy on Australian large caps. Now, if you shop through the app, Brains can invest in your Raise account as an incentive for you to shop through the app. Personally, I don't use Raise, but it's worthwhile if you're just starting out, but long term, look somewhere else. So to sum it up, CommSec Pocket allows you to buy individual ETFs, Spaceship has its own portfolio and you can invest in that portfolio, and Raise allows you to invest in a portfolio of ETFs. Hopefully this video made sense. I hope this was helpful, guys. I hope you now have enough information to start researching and start to take advantage of the compounding effect. Please like and subscribe if you enjoyed this, and I'll see you in the next one. Thanks. I really don't